So true. Thanks, Ryan. You know what it is? Your money and all eyes are going to be back on the New York Stock Exchange this morning after stocks took a huge plunge last week. The Dow lost more than 1,000 points. The biggest culprit, bad news out of China. Overnight, the main Shanghai share index plummeted by more than 8%. Joining us this morning to talk more about it is our good friend, a financial expert, Joe Bert. Great to see you, as always.
Good morning, Amy.
Okay, so first of all, we had an interesting discussion during the commercial break, which is that China was up significantly last year, right?
Last year, the Chinese market was up 125% in 1 year. A lot of speculation going on there. So, you know, when you're up that high that fast, you're going to give some of that back. And, of course, it's running through the European markets and now the U.S. market.
Okay, so what we're seeing maybe is more of an overcorrection in China, which has a huge impact on us.
It does, definitely. And so when that kind of stuff happens, plus, you know, you have to look back. It's been, you know, the market hit its low in March of 2009. So it's been 6.5 years since we've had any kind of correction. We're well past that. But this is a garden variety kind of correction. 10 to 20% decrease. We have these on a regular basis. It's just that we haven't had one in so long that people say, oh my gosh, you know,
right.
And that's what's going on in the market. Yeah.
Okay, so what should you do? Should you be looking at your 401k?
No.
Okay. And why not, Joe?
Because what people do is they get emotional about this. It's, you know, pretend like you're in an airplane. We're hitting some turbulence.
Right.
What you want to do is run in the cockpit and start monkeying around with the controls. It's the worst thing you can do. And that's what people do.
That's a great analogy.
Well, that's exactly what goes on. And that's why most people are poor investors. You know, the stock market is the only market that when things go on sale, people run out of the store.
Yeah, it doesn't make sense.
It makes it, the time to buy is when things are low. Okay. Now, nobody can pick the tops, nobody can pick the bottoms. You know what they call somebody who says they can pick the tops and pick the bottoms? A liar. you can't do this consistently. You got to remember that investing is long term.
Right.
Long term, I'm meaning 5 years or more. If you needed the money that's in the market today in the next couple of years, you shouldn't have been in the market. But investing is long-term, particularly when it comes to your 401k. Your 401k is for your retirement. Forget it. Don't look at your statement. If you have extra money, this is a good opportunity to buy.
Right, because there are a lot of stocks. Maybe you were saying, gosh, I can never afford to buy Apple stock or General Motors stock before.
Well, here's what's wrong. You shouldn't be buying individual stocks.
Okay.
Because individual stocks is where you take the big hit. We all remember the great companies of the past.
Yes.
Can you remember, say, Polaroid? Can you say Eastman Kodak? Can you say General Motors? All filed Chapter 11. What you want to have as mutual funds is what you have in your 401k. Let those managers figure it out. This is the opportunity to buy. If you haven't maxed out your contribution, your 401k, at your age, you can put in a maximum of $18,000 this year. If you're not up at that level, go to HR today and tell them you want to put in the max this year. I guarantee you'll look back in a couple of years and say the best thing Joe Bert ever said.
I love it. Doesn't he give great advice? Joe Bert, thank you so much.
Right,
how can people find you?
Just Google me, Joe Bert, 2 words, B-E-R-T, Joe Bert.
All right. You see the big sign, their office right there along I-4. You probably drive past it every day. Great to see.